If you wake up one morning and your money is still there, how do you know it's real? The numbers you see on your screen, do you really think they belong to you? Or are they just a promise the system made to you? Most people never think about this, because as long as the system works, no one questions it. But one day, that changed. Until 1971, money wasn't just an idea. The US dollar was backed by gold, which meant, in theory, every dollar you owned represented something real, a reserve, a physical value. This system gave the world confidence, but that confidence wasn't as strong as it seemed. By the late 1960s, the United States was facing a serious problem. Wars, spending, and a growing economy were putting more pressure on the system than it could handle. There was a simple issue. The amount of dollars in circulation was greater than the gold reserves, which meant if everyone demanded their gold at the same time, the system would collapse. And some countries had already realized this. Nations like France began converting their dollars into gold, quietly, without causing panic. But this exposed the system's weakest point, because this was a domino effect. If everyone did the same, nothing would be left. And then, that day came, August 15th, 1971. U.S. President Richard Nixon addressed the nation, but at that moment, no one fully understood what had just changed, because this wasn't a revolution with tanks. This was a silent decision. That day, the link between the dollar and gold was cut, not suddenly, but permanently. And from that moment on, money became for the first time purely a matter of belief. What you owned was no longer tied to something real, but to a system, a promise, and the value of that promise existed only as long as people believed in it. At first, nothing seemed different. People kept working, salaries were paid, banks remained open. But in reality, everything had changed, because the system was now built on a different foundation, not on real value, but on trust. This new system allowed more money to be created, more credit, more debt. The economy grew, but at the same time it became more fragile, because this system had only one weak point: people's trust. If one day people stop believing in it, everything collapses at once. And throughout history, we've seen small versions of this happen. Banks failed, markets crashed, people lined up to withdraw their money, but it only happened in pieces. The entire system was never tested, because if it ever is, the outcome will be different. Today, the money in your bank isn't physically there. It exists in loans, investments, inside other systems. And if everyone tries to withdraw their money at the same time, the system cannot handle it. This is not a theory. This is how the system works. But people don't think about it, because they don't want to, because the alternative is terrifying. Because if this is true, then what you think you own isn't really yours. It's only been lent to you. And that loan is built on trust. In the financial world, the most dangerous thing is not a crisis. The most dangerous thing is when people realize the truth at the same time, because when that moment comes, no system can survive it. In 1971, the world changed, without realizing it. But one day, if everyone realizes it, this time it may not be silent. And then only one question remains. If the system is really just a belief, do you still trust it?